Breaking news: America. President Trump has just signed what many are calling the most significant economic relief package since the pandemic began. That's right, a fourth stimulus package has officially been approved, with direct payments of $4,200 scheduled to hit millions of Americans' bank accounts within the next 48 hours. Could this be the financial lifeline you've been waiting for? Stay tuned to find out exactly who qualifies, how to ensure you receive your payment, and what this means for our economy going forward. If you want to stay informed about important updates like this that directly impact your wallet, hit that subscribe button right now so you never miss critical financial news that could put thousands of dollars in your pocket. The announcement came late yesterday evening from the White House, catching many economic experts by surprise. After weeks of closed-door negotiations with congressional leaders, President Trump emerged victorious with a bipartisan agreement that prioritizes direct relief to American households still struggling with inflation and economic uncertainty. According to Treasury Department officials, the distribution process has been streamlined compared to previous stimulus efforts, allowing for unprecedented speed in delivering these funds directly to eligible citizens. But what's driving this sudden push for additional economic relief? And why is the amount specifically set at $4,200? Economic analysts point to several converging factors that created the perfect storm necessitating this stimulus. Despite positive job numbers in recent months, real wages have struggled to keep pace with persistent inflation, leaving many working families with diminished purchasing power. Additionally, key economic indicators suggested a potential slowdown in consumer spending, which accounts for roughly 70% of America's economic activity. Was this decisive action taken to prevent a recession before it could take hold? Many financial experts believe so, with several prominent economists praising the timing of this intervention as preventative medicine for the economy. The stimulus package differs significantly from previous iterations in both its targeting and implementation. Unlike earlier programs where payments were phased out based on income thresholds, this fourth stimulus utilizes a more sophisticated formula that factors in not only income but also regional cost of living differences and household size. This means that families in high-cost metropolitan areas may receive their full benefits despite higher nominal incomes. Acknowledging the vast differences in purchasing power across America's diverse economic landscape, does this more nuanced approach signal a more sophisticated understanding of America's complex economic realities? Many policy experts believe this represents a significant evolution in how federal aid is distributed. Treasury Secretary Janet Stevens outlined the distribution timeline in a press briefing this morning, explaining that direct deposits will begin appearing in bank accounts within 48 hours for those who have current banking information on file with the IRS. Physical checks and debit cards will follow on a rolling basis over the next 3 weeks, with an expected completion date for all distributions by the end of the month. The IRS has established a dedicated portal on their website where Americans can check their payment status and update their information if necessary. Have you received stimulus payments in the past without issues? If so, you're likely already in the system and don't need to take additional action. What makes this stimulus package particularly notable is its broader economic framework. Beyond the headline-grabbing direct payments, the legislation includes targeted business tax incentives designed to boost domestic manufacturing, substantial infrastructure investments focused on rural broadband expansion, and significant funding for workforce development programs. These complementary measures are designed to address both immediate financial needs and longer-term economic resilience. Could this multi-pronged approach be the template for future economic interventions? Many policy experts are already suggesting that this more holistic approach represents an important evolution in fiscal policy. The funding mechanism for this massive economic package has raised eyebrows across the political spectrum. Rather than adding to the deficit, the legislation includes several revenue-generating provisions, including the closure of specific corporate tax loopholes, adjustments to capital gains rates for ultra-high net worth individuals, and the implementation of a minimum corporate tax rate that ensures profitable corporations contribute their fair share. This pay-as-you-go approach represents a significant departure from previous stimulus efforts. Is this fiscally responsible approach setting a new precedent for government spending? Financial markets seem to think so, with bond yields remaining stable despite the massive spending package. Critics of the stimulus have voiced concerns about potential inflationary impacts, questioning whether injecting billions into the economy might exacerbate already elevated prices. However, administration officials have emphasized that the targeted nature of the relief, combined with supply-side investments, will actually help alleviate inflationary pressures by addressing specific economic bottlenecks. Federal Reserve Chair James Powell expressed cautious optimism, noting that the stimulus package's design incorporates lessons learned from previous economic interventions. Have we finally found the right balance between stimulating economic activity and controlling inflation? The coming months will provide crucial data. For individual Americans wondering about eligibility, the guidelines are relatively straightforward. Single filers earning up to $75,000 and joint filers earning up to $150,000 will receive the full $4,200 payment per adult, with additional payments of $1,400 per dependent. The payments then gradually phase out, with eligibility ending completely at $95,000 for individuals and $190,000 for joint filers. Social Security recipients, railroad retirees, and veterans benefit recipients who don't typically file tax returns will automatically receive payments based on information already in government systems. Are you unsure about your eligibility status? The newly launched IRS portal allows citizens to check their estimated payment amount by entering basic personal information. Consumer advocacy groups have already begun educating the public about potential scams that inevitably emerge during stimulus distributions. Remember that government agencies will never call, text, or email requesting personal information or payment to process your stimulus funds. All legitimate communication regarding your stimulus payment will come through official mail from the IRS or Treasury Department, or through secure government websites ending in .gov. Have you received suspicious communications claiming to be about your stimulus payment? Report them immediately to the Federal Trade Commission through their website or hotline. Financial advisors across the country are busy fielding questions about the most strategic uses for these unexpected funds. While individual circumstances vary greatly, experts generally recommend prioritizing high-interest debt, establishing or bolstering emergency savings, and addressing deferred medical or home maintenance needs. For those whose essential needs are already met, consideration could be given to retirement contributions or educational savings. What many financial planners emphasize is the importance of intentional planning rather than impulsive spending. Do you have a plan for your stimulus payment that balances immediate needs with long-term financial security? The economic impact of these stimulus payments is expected to be substantial and immediate. Economic modeling suggests that every dollar of direct stimulus generates approximately $1.40 in economic activity through the multiplier effect, with roughly 140 million households receiving payments. The aggregate demand surge could provide significant momentum to local economies still recovering from pandemic disruptions. Small business associations have expressed particular enthusiasm, anticipating increased consumer spending in local retail, restaurants, and service sectors. Is your local community still showing signs of economic struggle? This injection of funds could provide the catalyst needed for more robust recovery. As this story continues to develop, we'll provide updates on implementation timelines, economic impacts, and any adjustments to eligibility or distribution methods. Remember that staying informed about these critical economic developments isn't just about knowing when money will arrive in your account, it's about understanding the broader economic forces shaping your financial future. Have questions about how this stimulus package might affect your specific financial situation? Drop them in the comments below, and we'll address the most common concerns in our follow-up coverage. Don't forget to subscribe to our channel for ongoing updates about this historic stimulus package and other critical financial news that directly impacts your wallet. Hit that notification bell to ensure you're among the first to know when new developments emerge. Your financial well-being depends on staying informed, and we're committed to bringing you accurate, timely information you can act on. Thanks for watching, and we'll see you in the next update.